a topic of more than casual interest to you and to the gentleman joining me here on set. And screen right is David Scanton, the founder and CEO of Advisors Academy. Screen left, Jeff Yastine, the editorial director of financial newsletters, Newsmax here. Gentlemen, thank you both for being here. As we get started, I want to get your reaction to something. Last month, Steve Forbes spoke right here on America's Forum about the inconsistency of the stock market, also predicting its decline. Let's listen to what Steve Forbes had to say.
Well, the economy is sort of in the position of a flu. It's not like pneumonia, which is going to put you in bed, but you don't still feel very good. So yes, it's not as bad as it was in 08 and 09, but again, after every sharp downturn in American history, JD, up to now, we've always had a sharp recovery, and then the question became, could we sustain it?
Well, Steve Forbes says, David, it's like the flu. It seems that Mr. Faber is talking about more like the bubonic plague in terms of what's going on. Where do you see the markets heading?
Well, I do agree that we're overdue for another correction. We're overdue for another drop. Bottom line is that we, at the turn of the century, slipped into what is often referred to as a secular bear market cycle, which is basically a long-term generational bear market. And if this unprecedented high level of the market right now were permanent, not temporary, we'd be breaking 2 Guinness Book World Records regarding the stock market. First, it would be the first time we've recovered this quickly after only 14 years. And second, it would be the first time we've recovered without having 3 or more major drops. So thus, yes, a major drop is very much overdue.
Major drop, does it become a crash, Jeff Yastine?
That's, of course, the million or gazillion dollar question that nobody, and even Faber, says you just can't predict that sort of thing. There are just so many different variables no one can really say. And probably the bigger question is, even if you knew, what do you do with that information? Do you completely exit out of stocks, everything? What if you're wrong? What if Faber's wrong? That's the tough part. The better idea is to just focus on, if you expect something like that to happen, what are the stocks you're going to buy to take advantage of those sorts of depressed prices?
Now, Faber points out a number of technical indicators are negative, including the fact that the market is being led now by a narrow group of stocks. Jeff, you monitor all this for the newsletters you helped edit and compile. Can you elaborate on Faber's critique of this narrow group of stocks?
Sure, and it's not just Faber. I mean, there's a lot of data out there that demonstrates some of this. The cyclically adjusted price-earnings ratio, which too long to go into an explanation of what it is here, but basically that's a method of valuation that shows the market is highly overvalued. You can also look at things regarding the opinions of investors. People are overwhelmingly, and Wall Street is overwhelmingly bullish. It's very tough to find anybody who has even a slight bearish take, except for Mark Weber and a few of us, Mr. Scranton.
Well, let's turn to David Scanton now, and let's ask, if this big correction is coming, since you're the founder and CEO of Advisors Academy, what do you advise in general? What should people be doing with their money?
Well, I don't think it's wrong to take some profits out of the market and go to cash with some of your money at this time. We have such irrational exuberance in the markets, not just in the stock market, but even the bond market. Remember, it was only a few years ago when we were worried about Spain, Italy, and Portugal possibly defaulting on debt. Well, ironically, here we are, and today their 10-year government bonds are only paying about 1/3% interest more than ours. And those fears, though, really haven't gone away, but the bondholders have gotten to a point where they only really require an extra 0.3% to justify that amount of risk. And the same was true with Portugal until last week. Last week when Portugal hit the news, all of a sudden their interest rates came up significantly as a result of that. It's just a lot of cash that's been on the sidelines for years now, since 2008, and that cash is going into the stock market, going into the bond market, but it's nervous.
David, don't you find that amazing? That just a handful of years ago, Spain, Portugal, the bad boys of Europe, the sick men of Europe, and yet it's like, you know, most people or most companies go into bankruptcy or come close to it, and there's some sort of extra premium that bondholders want. In this case, there's so much money flooding, and I just find it amazing.
Yeah, it's incredible, and it doesn't make any sense. And that's what I say. I don't think there's a problem with taking money off the table, because when things really don't make sense intuitively, sometimes you just have to follow your gut instincts. And I think people sometimes are afraid to do that with money, but they should.
2 minutes left, and everything we're talking about here points me in the direction of the value of money. With the qualitative easing that we've seen, with so much money at play here, and the currency values influenced by bureaucratic fiat, you would think that inflation is going to come roaring back sometime soon. What about that? A crash or a correction followed by the resumption of inflation?
I think for inflation is too much money chasing too few goods. And right now, what the markets are witnessing is that the money that's out there isn't really chasing goods. It's being used to pay off debt. It's being saved and invested. That's why it's driving up bond prices and stock prices all at the same time. So when you cannot successfully increase demand, you have as much of a chance for deflation as you do inflation.
What about that, Jeff?
I would disagree just a little bit in that, not in the essence of it, but there was something happened back in June where Janet Yellen said, somebody asked about CPI, which had just come out and had ticked up. The trend for core CPI, Consumer Price Index, is starting to move back higher now. Janet Yellen downplayed it and said she saw it as noisy data. And the question is it just noisy data, or is it the beginning in a reemergence of inflation, as some of us think it might be?
As I hear Chairman Wellen talk about noisy data, I think about a presidential campaign debate of a few years ago, fuzzy math, maybe more than a few years ago. Whether it's nervous data, fuzzy math, we thank both you gentlemen for coming and shedding light on what may be in store for us on Wall Street. David Scanton, founder and CEO of Advisors Academy. Jeff Yastine, the editorial director of so many financial newsletters here for Newsmax. Thank you both. How do you feel about the markets, huh? Are you bullish? Are you bearish? Can you even bear to talk about it? Why don't you tweet us your comments at Newsmax TV, hashtag America's Forum. There's also newsmaxtv.com/comment. And don't forget Facebook. We're coming back.